All right, let's go. Let's do this. Give a few people a little more time to hop on. All right. All right. Thanks for joining in this Spaces, Clubhouse, YouTube, whatever you are joining us on. Just want to talk about one-shot trading days. I mean, we're not getting a whole lot of volatility, and volatility is really the name of the game when it comes to profit, loss, success, lack of success. So volatility is what traders thrive on, which is the change and the difference and um, the movement in price. So right now we'll just go through a couple things. Be sure to join my clubhouse if you're not in it. Follow me on Twitter and follow the YouTube page as well. Um, we're looking at QQQ right now. Let's just look at QQQ. And what I noticed about QQQ, this is the mind blowing thing. The two indices moved almost completely differently when pre market hit versus when the opening hit when compared to each other. So SPY, if you look at SPY, if you pull up your 5 minute chart on SPY, SPY dips down to $3,385 pre-market. Okay, $385 pre-market. Now we trade options, so you can't trade options pre-market. Okay, dip down to 385 pre-market. Now we look at QQQ, and QQQ dipped all the way down to 302, which was right at the pre-market low for QQQ. Now this is why you have to differentiate and focus on what you're actually trading, because there can be differences. The market moves similar to each other, it mirrors the movements, but it's going to be a good video. Looking and determining what you want to trade. QQQ is a lower price stock that actually is moving more than SPY right now. So SPY is the big liquid monster. It's the big liquid volcano that everybody wants to hedge in and put money. It's a crowded trade, so a lot of the price action is held simply because the market makers know that they can squeeze more money from the lack of volatility, because that's how options expire worthless. So looking at what happened today, and I'm going to keep this real brief, 10 minutes max. Looking at what happened today, we see you got your chart pulled up, your 5 minute charts. Heck, I know some of y'all do 60 minutes. I'll look at 60 minute chart. On QQQ, we spiked down to 301 pre-market. Now remember, this is a secret. I'm going to tell you guys. Pre-market lows, a lot of the times you can rely on them for support and resistance. Pre-market highs, depending on where the trend is, you can rely on support and resistance. Now, right now we're trending up, so of course we've been breaking pre-market highs, but we haven't been breaking pre-market lows. Keep that in mind. So with QQQ, again, the significance of this is QQQ pulls down to that pre-market low, which is support at 301, 302. Immediately, almost, when it pulls down to 302, it takes off and hits 306 almost. 306.05. Okay. So we get a move from 302 to 306. That's 4 points. All right. That's turning 6 cents into 1, 2, 3, into 70 cents. So you're 11 times in your money, or you're 12 times in your money. You're doing 12x. Okay. Now At SPY, SPY, with SPY, we're gonna stay focused on these two. With SPY, you got a move down, a spike down to 385, but it opens up at 390. That's 5 points higher. Opens up at 390, and we got in 391, and it goes to 394 before it pulled back. That's a difference. That's a huge difference. A 3-point move versus a 5-point move. Okay. Even a 4-point move. Why? Because it's a higher percentage. It's a higher percentage. SPY's up 3% today. Okay. So again, understand the difference in these instruments. QQQ is Invesco, Tech Stocks, SPY is S&P ETF. Okay. Now that's a jewel in and of itself. Feel free to DM me, email me, and let me know what you think about that. We're using a strategy, it's a brand new strategy with Keltner channels, and we're coming out with a course. If you want that, let me know. DM me. It's going to be, we're still trying to determine what the price is, because all my profits the last few weeks have came from trading with Keltner channels. Now, when you combine those with other indicators, it's a really dynamic instrument and tool to use. Okay, so right now we're looking at the FOMC coming up. First of all, we got to talk about these trend lines. The trend lines on the S&P, we're bumping up against that. Matter of fact, I'm gonna load my study so we can see exactly where that's at. Anyway, anybody feel free to give me a shout if you got any questions. Oh, I'm on the wrong screen. This is the reason why I could not get still can't get them up. You know what? Don't even worry about it. So right now we were in a triangle. Okay, there was nowhere we could go but up. They were trying to fake. They were trying to shake. They were trying to dip before they ripped. When we went down to 390, there was a buy. It was a buy on SPY. Went down to 390 and went up to right at 394. Okay, so there was a huge dip pre-market. Now we barely spike down and we grind up. For options, that's not good to grind up. You want a fast move. Now, the crux, the crucible of this lesson is right here at 10:30. Right here at 10:30, we get oversold on the daily. I'm sorry, on the 5-minute. We get oversold on the overbought on the hourly, and then we get overbought on the 15. We're overbought on every time frame. Every time frame. Listen, every time when multiple time frames line up with support and resistance, and you're looking at long time frames, 60-minute horizontal support and resistance, look at how that plays out. Because right now we're at the top of a range. 396 was the exception, a rally that never stopped the other day. Still upset because we missed that. But 393 all the way down to 380 is the range that we're looking at. So when we're looking at this range, we have to expect these ranges to be hit every single day. We hit 380. Okay, back up to 393 to 396. Next day, the day after, we're back down to 383. Back to 396. The next day, we're back to 388. Okay, that was Friday, and today we're at 385. So once we start getting into those ranges, we have to start loading up because things are getting ready to turn around. All right. Like I said, we're going to be coming out with our Keltner Center course. Uh, if you want it, give me a shout. Make sure you like, share, subscribe. Make sure you are. Oh, let me bring up Kara. See if she wants to say anything. Invite you to speak. Yeah, feel free to ask any questions as well. FOMC. Let's talk about FOMC real quick. FOMC is going to be a event because, okay, let's take a look at what happened. The banks are getting zero interest rates, and then it's 1, and then it's 2, and then it's 3. Go ahead. Go ahead. Okay. Did you want to say anything? Yeah. No, you're good. Yeah, no problem. You can just you can chime in anytime you're ready. But and I invite you up to speak. You can accept it if you want. So anyway, the FOMC is going to decide on interest rates. The reason why we are in this predicament with banks right now is because FOMC has raised interest rates. So you have to understand with bonds and treasuries, the stock market is a small percentage of the global investment market. You got bonds out there, company bonds, you got treasuries, you got notes, you got all kinds of instruments that people are using in order to get exposure to the market. So whenever you have bonds, buying them at a low rate, when the interest rates go up, the bonds are worth less and less and less because who wants to buy a bond at 5% when you can or 1% when you can buy at 5%? So fast forward 2 years later, the interest rates go up. These banks have been buying bonds, and so they have all of these hold till maturity investments that they cannot get off their books because these are 5-year notes, these are 2-year notes. So they got all these assets. They've taken billions in losses because their trade isn't profitable because interest rates have made the bonds that they bought gaining 1% interest basically worthless because now the Fed's raising rates to 3 and 4 and 5%. So who wants to put their money in the stock market when you can just stick your money in an instrument and just get a guaranteed 5%? Especially when the S&P hasn't made those returns lately. So it looks like they're forecasting for rates to stop, for rates to pause, because that's what has perpetuated this banking meltdown. That's why Silicon Valley Bank failed and SI failed and Credit Suisse just got taken over because the Feds are raising interest rates and it's slowing down the economy and it's creating ripple effects. Okay, so just be on the lookout. If they raise rates, if they pause rates, the market is probably going to go bananas. Okay, if they only raise interest rates 25 basis points, you may see a little pop. If they raise 50 basis points, it's over with. The stocks are just going through the floor. Okay, so but anyway, that's beside the point. Want to make sure you understand if you're trading options, even if you're not trading options. We trade exclusively options, um, and you can always message us on the back end, greenwoodstocktrading@gmail.com. I'm gonna drop my link tree actually, so we can that way my link tree can be. I think I'll put that in the bio as well, and you can pretty much access me on all platforms. Um, if you're just getting into stock trading, then I mean you're just gonna basically want to you're gonna want to paper trade if you